So the other part to what you were talking about is capabilities, right? So you're obviously there at the helm, but then you need seasoned people to look after, all that you are doing in terms of lending activity. So it'll be interesting to understand the capabilities that you've built on the credit opportunities side, and if you can help us with a few case studies for investors to understand the strategy a little better.
Absolutely. So this is a deep question and something very close to my heart. As I said, when I started my career, I was in the business of trading. A lot of people think trading is an art. You need smell to judge a great opportunity. I feel the opposite is true. You need science. It's a reputable opportunity. The world's best traders are actually made it a science. At Neo Asset Management, our philosophy on investing and asset management is twofold. Obviously, we will hire teams with deep specialization, teams who understand this space, have seen it for many years, and building a highly competent team is very important. But what is more important in our view and in my view are two more things, Nitin. And I would place disproportionate importance on them. In the business of investing, I think in any business for that matter, we fundamentally believe good investing is the outcome of healthy, open debates. And as an asset management firm, we encourage that. We encourage debates, we encourage multiple point of views, and that is when we get the benefit of collective wisdom. Right. The way we run our investment committees, there is a science to that also. And I truly believe, investment committees, I've sat in many investment committees, there is a chair who sometimes takes the decision, and at that point of time, you don't get the multiple views, the wisdom of collectiveness emerging.
True.
At Neo, what we've done is, and this is a very small change, but I think this is a big step. We do a blind ballot voting. Everybody who is part of the investment committee casts his vote so that nobody influences the other's decision. And at that point, we see the outcome. Is it a unanimous vote? It's a very small change, Nitin, but from a behavioral point of view, I think it's a massive change in the world of investing. So I think what is required is getting an inclusive culture, healthy debate, and being very honest. I think a lot of investing firms, the holy grail of their success is when you see the outcomes in the mirror and you're not ashamed to highlight it to anybody. The third most important thing, teams, culture, processes. So a lot of the stuff that we do is common sense, and I want it to be common sense. We are not in the business of finding exotic ideas. We are not in the business of discovering new things. We are in the business of doing simple things really well. Processes play an important part. How you do your investment committees, pre-investment committee checklists. Is there a standardized way of looking at investments? Is there a way of standardized looking at investments after you've done the investments? So that we are people dependent and yet not people dependent. So, and that's the way we want to run investments at Neo Asset Management. That's the way we think we will truly build an institution. It is not about me or Puneet Jain or Sandeep Khemka or Abhishek Goel, the senior people in our team. It is about Neo Asset Management in totality.
True.
Yes, so a long answer to one of your questions. The other question that you asked, Nitin, is can you provide some case studies to our viewers on the type of credit transactions that we do? Yes, so we've done 6 investments in the last 1 year. We've evaluated more than 180 transactions. 180 transactions, all EBITDA positive companies, which tells you the opportunity that we have seen. Right. Fundamentally, I believe the more you evaluate, the better your chances of success, because then you can truly reject. Right? Rejection is a great weapon in the hands of an asset manager. Let me talk you through one. This was our first investment, so it's always special. It's very close to the heart. This was a fully constructed hotel in Ahmedabad city. It's called ITC Welcome Hotel. Many of you might have stayed there. Many of you will stay there, I'm hoping. This is on Sabarmati River, great location. So yes, location matters, counterparty matters. And first generation entrepreneur, he's built this, very simple man. Now, why is this opportunity? So this promoter was running the hotel. He owns the hotel, ITC runs the hotel. He was running the hotel, Nitin, from 2009 to 2019. In 2019, he went and did a JV with ITC. That is when ITC told him that you need to renovate the hotel. And he needed money for that. In 2019, the promoter went and took money from an NBFC. The NBFC gave him money, promised him that whenever in future renovation capital is required, I will keep giving you money. 3 years passed. Obviously, he had the misfortune of seeing through COVID. The hotel was getting renovated. But in 2022, when we met this guy, the NBFC told him that we've stopped doing this business as a corporate philosophy and you now need to repay my money, plus I will not give you the balance money for renovation. And this happens in real life all the time, right? Yes. Now here is a situation where this promoter could not have borrowed from a public sector bank or any other NBFC, which are the traditional channels of finance, which all of you and me associate with, right? Because a bank will typically not give money to give exit to another NBFC, right? RBI as a regulator from a distance cannot distinguish whether it's a genuine refinance transaction or probably no, right? Which is why the opportunity comes to asset managers like us. We call this in our parlance a refinance transaction. So here is a great asset, very good. So let's just go with our framework.
Sure.
Counterparty, we were very comfortable with, first generation promoter, hard sweat, money earned, put in this project. Simple guy, we've done our diligence on him. And we typically do external fraud audit, forensic checks on counterparties also. That's how we try to make it a repetitive science. Right. So counterparty, we were comfortable with. Cash flow, yes, fully constructed hotel. We were not taking construction risk. As soon as the renovation was done, ITC was ready to kickstart the hotel. This hotel would generate 15 crores of EBITDA every year. So it's a healthy cash flow, 4.5 to 5-star hotel in a great location, in a great micro market, because Ahmedabad is a hotelier's market in that sense. Third is collateral. We were the only lenders, Nitin, in this transaction. Typically, we are the only lenders in most of our transactions. I think that's competitive edge.
Sure.
Collateral was worth 180 crores. 4 times the value that we lent. So we gave 46 crores, he repaid the NBFC, we are the only lenders. This is generating 4 times collateral cover on a marquee asset. Plus it's making 15 crores EBITDA from which he will pay you cash flows. So it's tick marking all the boxes. Is it generating cash flows? Yes. Will we get paid from the cash flows? Yes. Is the collateral cover sufficient and enough if something goes wrong? Absolutely yes. Are we the only lenders? Yes. So this was the first transaction that we had done as part of the Neo Special Credit Opportunities team.
Lovely to hear that. And you're saying 6 transactions already done with. How many transactions could potentially be part of this fund?
So we endeavor to do at least 15 to 20 transactions in this fund. And this is one of the other learnings. I think in equity, as an asset class, one can run concentrated portfolios.
Right.
Obviously, there is a difference of view. You can run a 10-stock portfolio, 5-stock portfolio. You can run a 50-stock portfolio. But in credit, fundamentally, we believe diversification is super important.
Yes.
And the reason I want to highlight this, a lot of times when I meet clients, we tell them we are looking at delivering estimated gross IRRs in the range of 20 to 21%. The beauty of doing 20 investments is, when you're so diversified, assume something goes wrong with one investment, right? And it can happen. I mean, to the best of our efforts, something can still go wrong. The impact on your portfolio returns, the drop from 21 estimated will be closer to 19.5. And that is what finally safeguards your portfolio. Yes. And that is very important to us, which is why we want to do as much diversification as possible.